With the NASDAQ and tech stocks seeming like they're making new all-time highs every single day, it's important to take a look at sleepy consumer staple names like a PepsiCo to see if there's really opportunity elsewhere in the market. Pepsi just reported their Q4 results. We'll get into these numbers both from a revenue and profit perspective. We'll also take a look at the next few years over at Pepsi. Likely you'll be buying the stock as a buy and hold investment. So it's important to see what the foreseeable future really looks like. We'll also take a look at the dividend, as that's an important piece over at Pepsi. We'll take a look at the financials, and then as always jump into the stock chart. This one really for the last 15 years has been making an uptrend. You can trace it all the way back to 08 and 09, and since then has been in an uptrend. It seems like it's coming down to a level where it would make a lot of sense to come in here and pick it up as a long-term buy and hold investment. So we'll take a look at that and a whole lot more in today's video. As always, if you are new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. It would be much appreciated. Shares of Pepsi down nearly 2% on the year, over the past 1 year, and down nearly 3.5% on the day that is on the heels of reporting their Q4 results, which we'll get into in just a minute. But this stock really has underperformed the S&P mainly over the past 1 year. As you see, it was kind of performing in line, and then since the end of 2023 basically has pretty significantly underperformed your S&P 500. And so we'll see whether that can continue or whether Pepsi has the room to rise to the upside and maybe outperform the S&P over the next little while. From a price to sales perspective, this company also trading not too expensive. In fact, trading cheaper than it has previously historically. I have a 5-year price to sales pulled up, and this one likes to trade somewhere between a 2.75 all the way up to a 3.1 times on a price to sales. Again, this is trailing 12 months. So it looks back over the last 12 months of sales for Pepsi, trading at just 2.6 times on a trailing basis. So keep that in mind. It is trading slightly cheaper than it has historically, at least compared to itself. Now, Pepsi's Q4 results were mixed as they missed on revenues by nearly $520 million. Revenues still coming in at $27.8 billion. That was a decline of roughly 0.5% on a year-over-year basis. And non-GAAP EPS coming in at $1.78. That did beat by 6 cents. So miss on the top line, but a beat on that bottom line. And certainly growth of just negative 0.5% is disappointing, especially considering inflation still remains relatively high. This company actually declining earnings on a year-over-year basis, not the most exciting thing. Likely what is sending shares down just a little bit. And then on top of that, you also had not the best guidance, as guidance and outlook for this upcoming 2024 now is expected to come in at 4 percentage points increase in organic revenue growth. This is a company that has a ton of brands under its umbrella, and so it's important to take a look at organic revenue growth. It basically strips out any revenue growth that could come from acquisitions. The estimate on Wall Street was closer to 5.6%, so slightly slower on that organic basis, and then now they're expecting an 8% increase in constant currency for that bottom line. And seems like Seeking Alpha has this updated. So Wall Street now expecting for that 7 to 8% growth on that bottom line. The estimate on Wall Street is at $8.17. A pretty tight estimate. You see the low end is at $8.15 and then the high end is at $8.20. So pretty small range for Pepsi. This is a company that's fairly predictable, and you look out the next few years and they're basically expected to grow in that mid single digits on that bottom line, basically out into perpetuity. And then on the sales side, similar story, expected to grow in that 4 to 6% throughout the next few years on that sales side. So this company very predictable from both revenues and earnings. They don't have a ton of moving pieces in their business where you kind of don't know what you're getting. You know, the way Pepsi can increase these profits is simply by executing on maybe price hikes or controlling costs, especially as inflationary costs look to come down. That will help their bottom line. And then top line sales, organically at least, is through spending on sales and advertising, and then also new product innovations that they come out with just their Pepsi brand and things of that nature. Now, on top of that, you also got a dividend raise of roughly 7%. So Pepsi's dividend for 2024 will come in at $5.42. In this most previous year, it came in at $5.06. And so when we see this company expected to earn roughly $8.17 on that bottom line for 2024, and then they're expected to pay out $5.42. That dividend looking fairly safe. Again, you get nearly a 3% yield on this one, considering the dividend will be raised, probably updated tomorrow. And so that's a big reason why you would come in here and pick up shares of Pepsi. You get a nearly 3% yield. You also get consistently growing dividends. This was the company's 52nd consecutive year of their annual dividend increase. And so that will take effect in June of 2024, and you get that consistent dividend growth at a company like Pepsi. And as we saw, the dividend still looking fairly safe. It is a decently large payout considering earnings per share of $8.17, but you get that dividend, you also get a buyback with a stock like Pepsi. Now, in terms of what their main comments on the conference call was that they see everything normalizing in 2024. So they saw a slowdown, especially in the US side of their business. When we jump into their North America numbers, we'll see this, but they saw that slowdown on US consumption on food and beverages, but that's something they see consumers will continue to improve in 2024 and things start to sort of normalize out. They also see the international opportunity as something that's remarkable and exciting, and it's growing faster than the US. The international market makes up roughly 40% of their business, and again, that is going to grow faster than the US, and so that's an exciting point to note. And then on top of that, they have a pretty strong energy portfolio as energy continues to outgrow other categories. Now, keep in mind, this isn't really organic growth over at Pepsi due to their heavy investment in Celsius, and then also their ready-to-drink coffee beverages by their licensing deal with Starbucks. And so growth in the energy portfolio won't really show up as organic growth in that 4%, but it will help their top-line numbers by maybe a couple more percentage points. Now, as we heard, the US consumption market is slowing down. We can see that really in the numbers as they break down their net revenue in terms of geography, and North America being the largest. They also break that down in terms of their different business segments. So Frito-Lay, this includes your Lay's chips along with your Doritos and other kinds of chips. That declined on a year-over-year basis, at least on a quarterly basis, now coming down to $7.4 billion. Last year, you were closer to 7.7. Also, on the Quaker side of their business, that came down pretty substantially, now down to $890 million. Last year, you were north of $1 billion. Quaker did experience a recall in this most recent quarter, and so that is something Pepsi is experiencing and is also expecting that to continue out for the next, call it 2 to 3 quarters, that the Quaker recall will affect sales on this business segment. It is fairly small, in fact, their smallest segment, but regardless will impact Quaker sales over 2024. In terms of the largest revenue segment, PepsiCo beverages, this is your classic Pepsi Diet and your regular Pepsi beverage in a can. That came at $7.9 billion, was down year over year from $8.1 billion. And then you see strong growth on the other markets. So you see strong growth in Latin America up to 3.9. Last year you were at 3.3, and then Europe sitting right around flat as well. So you really saw that decline in the North America market, but Latin America proving to be extremely strong, and then even Europe not seeing a decline nearly as fast. That was for this most recent Q4. For the full year, paints a slightly better picture where you still saw growth on nearly all their business segments, except for, again, that Quaker business, which took a hit due to this Q4. But really across the board, you saw growth, at least on that top line in North America. That's good to see. From an operating basis, you have the Frito-Lay, basically the bread and butter for this business, carrying the operating profit load and really very high on margins, at least compared to other businesses. Despite a slowdown in Frito-Lay North America revenue, those declined roughly $300 million. You still see an increase in your operating profit year over year on that Frito-Lay side. And so that's something Pepsi is able to control really well. Despite a slowdown on those revenues, they were able to maintain and even slightly nudge up those operating profits. That is also their most profitable business segment. So it's important to see margins continuing to do well in that segment. From the PepsiCo beverages segment, you did see a decline in your operating profit, but again, that is roughly in line with your decline in the revenues, pardon me. And so it seems like this most recent Q4 proved to be a bit more challenging than the full year. The full year really paints not a terrible picture over at Pepsi. You still have an increase in your net revenue, roughly $5 billion year over year for the full year. And then your net income also continuing to rise, at least on a full year basis. Now, in 2022, they also saw that impairment due to the juice transaction. And then along with that, in Q4 of 2022, they also took an impairment on intangible assets. This was their divestment from the Russia-Ukraine business. And so that is something they are lapping over in this most recent quarter. That also helped out their net income in this most recent quarter look far better than really compared to Q4 of 2022. So keep in mind those one-time line items where you see this footnote A basically saying in 2022 in that Q4, they sold off Tropicana and some other juice brands for $3.5 billion in cash. And that sort of is reflected as part of their statement of operations. Now, like we said, from a full year picture, it seems fairly stable, predictable over at Pepsi. Nothing to overly be concerned about. They are guiding for that 8% bottom line growth. And so what you saw with Pepsi this year is something really you can expect to see with Pepsi in 2024. From a cash flow perspective, this company is still chugging right along. They generated roughly $9.2 billion of net income. Again, that's for the full year 2023. That translates to roughly $13.4 billion of operating cash flows. Last year, you were sitting at 10.8, but keep in mind, there is that impairment due to that juice transaction selling off Tropicana. And so if you get to add back that roughly $3.3 billion transaction on a year over year, the net cash on an operating basis sitting roughly flat to just marginally higher. Nothing to be overly concerned about. They do still continue to spend on capital expenditures. This is your manufacturing facilities and really your property, plant, equipment over at Pepsi. And so spending on that, something certainly I don't mind. That is really how Pepsi gains their advantage. Their absolutely fantastic distribution network falls under this capital spending. And so on $13.4 billion of operating cash flow, spending roughly 5.5 on investing activities, not terrible, something I certainly don't mind. And then they also refinance a little bit of debt, issue some new long-term debt, and then the majority of their operating cash flows are spent in the form of dividends. As you see, they paid out roughly $6.6 billion for the full year. That was up from a year ago, again, likely due to that dividend increase. And then on top of that, you do get a buyback, roughly $1 billion every year. And then the remaining cash of roughly $4.6 billion, they basically add on to their cash pile. And so from a cash flow perspective, this business looking fairly healthy. They have a still ton of operating cash flows, and then they use most of that in terms of capital spending or returning to you in the form of dividends or buybacks. A very shareholder friendly company, to be fair, and nothing to be overly concerned about. Even from a balance sheet perspective, sitting on roughly $26 billion of current assets. You see inventories not really moving on a year over year basis. That's good to see, as they're kind of still able to move along those inventories, even despite inflationary pressures likely causing them to increase their price. The majority of this company's assets are tied into that property, plant, and equipment. These are your manufacturing lines over at Pepsi. And so from a asset perspective, looking fairly good. And then from liabilities, sitting on roughly $6.5 billion of short-term debt that did tick up year over year. And then current liabilities coming in at $31.6 billion, and then total liabilities at just under $82 billion. So from a balance sheet, nothing to overly be concerned about. You still generate a fair amount of free cash flow. You get to add that onto your cash pile every year, and then the remaining you basically return to shareholders in the form of dividends and buybacks. Now, from a stock chart perspective, this one has been looking very good for really the past 15 years, has been channeling on a pattern of lower highs and lower lows. Again, we trace it back all the way to the financial crisis of 08 and 09, and since then has been in a very predictable pattern. Now, as the tech stocks and your NASDAQ and really all your major indexes rise to all-time highs, Pepsi has seen a sell-off and really has gone nowhere over the past 1 year. And so that's why this stock is trading near the lower end of its range. I do think Pepsi has the ability to sort of continue to channel in this range and make a move to the upside. It is sitting just a couple percentage points away from the lower end of this channel at right around $164 a share. So if you want to be ultra patient, I think that is your first level to get into shares of Pepsi, as it comes closer to $164 a share. If you want to be a bit more safe and wait for this trend to continue, you can also pick it up on the way higher at right around where it is now, but once it confirms a bottom at $164 a share. Because certainly if Pepsi comes in here and breaks below this, you have a bit of support sitting right around $155 a share. That is probably your next level to maybe inch into shares of Pepsi. But if it does break this level, you probably want to set a pretty tight stop loss, because if Pepsi breaks the $155 mark, you're likely coming in south somewhere near $140 a share. And that is a pretty substantial decline for a stock like this. But again, I think in this sense, the trend is your friend. You're likely going to come in here and create a sort of bottom at $165 a share and then see some sort of reversal. That's really what Pepsi has done over the past 15 years. There's nothing in these numbers and financials to make me really say otherwise. They're still guiding for that 8% EPS growth. Although organic growth is expected to slow down just a little bit due to that Quaker recall, I think this one still has very strong operating cash flows, and then continuing to do extremely shareholder friendly things. I think your chance to come in here, pick up at 165, and then hold shares of Pepsi really throughout its ups and downs. This is a stock that you really hold on to for the long term. You continue to experience that dividend, and that buyback, and along with that dividend growth. And that is how you see your capital appreciate with shares of Pepsi. Certainly not one of the most exciting names, and certainly has underperformed tech, but it also seems to outperform tech whenever tech heads lower. And it seems like that time is getting closer and closer. That was my take on PepsiCo, a company I really like for the long term. The growth is just slightly slower than I would like, but I think a fine buy for a long-term buy and hold. Let me know your thoughts on this one in the comment section below, whether you're interested in shares of Pepsi near $167. As always, thanks so much for listening, and I'll catch you guys in the next video.